All right, folks, why don't we get started? For those who are just signing on, my name is Graham Default. I am Senior Director for Public Policy at ACT the App Association. Thank you for tuning in. I hope everyone is doing well. These are tough times. And, with this webinar, we want to provide just a high-level overview of some of the resources that are available for small businesses. This is a lot of challenges that folks are going through right now, and Congress was able to respond with about a $2 trillion stimulus that it passed late March and created or expanded a few key programs that are going to be relevant. And we wanted to share just a little bit about what the legislation did and what those programs are. Some of them are programs that are done through private lenders like the Paycheck Protection Program. Others are through state governments like unemployment insurance. You have to go through a state agency to get access to that. But the bill that Congress passed adds federal funding to that and then makes a few key changes to eligibility and then the length of time you're able to get access to the funds. So just a few different key differences. The list of programs we wanted to cover is here on this slide. And by the way, folks can ask questions. Madeline Zick on our team, she's policy coordinator, is going to be following along. The Q&A icon toward the bottom of your screen is what you want to click, and you can punch in a question, and she'll let me know when somebody asks something, and I'll try to address it as I'm going along. But so the main programs we want to talk about are the Paycheck Protection Program, Economic Injury Disaster Loans, Main Street Lending Facility, Unemployment Insurance, and then the Employee Retention Credit. That's a federal tax credit. So jumping right in. The one we want to talk about first was the Paycheck Protection Program. This is the one I think it's getting the most coverage in the news because it's an especially popular program. Much of it is forgivable, so that it's not money that you have to pay back, and so that's why it had a whole lot of popularity the first time around. The unfortunate thing is that the program has run out of money, but Congress is working right now. As of right now, it sounds like there's tentative agreement between the House of Representatives and the administration to settle on additional funds that can be put toward the program. So what is it? It's 100% government-backed, low-interest 7A loans. Many of you are familiar with the 7A loan program. Those of you who are not, don't worry. It's a Small Business Administration that's a federal agency loan program that is conducted by private lenders, so banks, but they are loans that are guaranteed backed by the federal government. It's for businesses, and it's supposed to be for up to 250% of monthly payroll costs, so 2.5 times your monthly payroll. The loans can be forgiven in an amount equal to what you spent on payroll, rent, and mortgage interest on leases and mortgages that were in effect on February 15th of this year. So the key piece here is that 75% of that forgiven amount has to be on payroll. You'll see this on a later slide, but can't be stressed enough. This program is really to ensure that you are keeping your employees in work. And so the other 25% of the forgiven amount, at least, can be spent on rent and mortgage interest and utilities. Let's see. The loan amounts are supposed to cover your payroll costs between February 15th, 2020 and June 30, 2020. So the funds have to be spent during that time. I was reading about a flower shop, for example, that had to give back some of the funds that they got through this program because they were going to they have higher staffing during the spring. Then during the summer, they have a lot fewer employees on payroll. Then they have to staff up again later in the fall. And it turns out you can't hang on to those funds and then pay folks on your payroll later on. You gotta spend the money during the really impacted period, February 15th to June 30. All right. So the eligibility requirements, just a quick overview. It's small businesses generally. And this has been in the headlines a little bit. The small business requirement does not apply to companies or businesses like restaurants, because those have been impacted so seriously. And so some really big restaurant chains have been able to get access to the Paycheck Protection Program. It's a little bit controversial, but Congress did that because they saw those types of companies as being really seriously impacted. So small businesses, and that's defined as companies that are employing 500 or fewer. The threshold for small business in your industry is the other threshold, whichever is greater. And then there's a chart that we have linked here. If you take a look at the slide, that under the Small Business Administration rules, they have specific thresholds for certain industries, but the 500 is usually going to be higher than that. For example, certain types of IT services and consulting, the threshold is 150 employees. Obviously, you want to go with that 500 because it's whichever is greater. Let's see. Sole proprietors, independent contractors, and gig economy workers are all eligible. So if you own your own business or you're an independent contractor, you're able to apply for a Paycheck Protection Program loan, and much of it can be forgiven on your own. And what this means is that if you've got employees who are 1099 employees, those folks are not going to be counted as your employees. They really have to be, W-2 workers. And that's because the 99 employees can apply on their own, and they can seek funding separately. Let's see. We have a good question here. If it's all right, I'm just going to go ahead and address it here. For the Paycheck Protection Program, an LLC operating as a sole proprietorship, working from home, only employee, eligible on April 10th for PPP. So justifying the full PPP going straight into the bank account like a paycheck normally would. So justifying paying yourself, I think the justification is that you typically pay yourself, and you're on your own payroll, and the purpose of the program is to keep you employed. And just because you're a sole proprietor, it doesn't want to disadvantage you and push you out of the program. So the justification is really just that, the program is really meant to pay your salary and not supposed to boot you out of the program just because you're the only one who works for the company. If you're part of an LLC and it's like a partnership of 3 people, it's not supposed to go to the individuals that are part of that partnership in that scenario, because you usually do lending at the LLC level, at the entity level, as opposed to at the partner level. Like, not each partner is seeking loans, and so it really has to be done at the LLC level. if you've got multiple partners. But if you're a sole proprietor and you're paying yourself a salary, it's really supposed to work. You're supposed to be eligible for that. So sole proprietors, nonprofits and veterans organizations are also eligible. So I mentioned earlier that some of the PPP loans may be forgiven. That is an amount equal to the amount that you spend on payroll, plus interest payments on existing mortgages, rent payments, leases, and utility service agreements. Again, 75% of it has to be on payroll. The limit is $100,000 per employee annually, and so there's an upper limit there, and the upper limit for the entire loan, I believe, is 10 million. And I have here the forgiven loan amount is reduced proportionately to the reduction in the number of employees. That just, it's designed to keep you, it's designed to have you, maintain your payroll. And it doesn't want to pay for somebody that you've cut from payroll, basically. Let's see. So amounts must be spent between February 15th and June 30th. I mentioned that earlier. The loan forgiveness amount is not going to count as taxable income. That would be kind of a bummer to have to pay federal taxes on a forgiven amount. So that's a nice benefit. The forgiven loan amount is reduced by the amount of any disaster loan amount received, and so that's a sister program that does not include forgiveness, and so they just don't want you to double dip too much, I guess. So the lending in terms, the lenders are going to determine eligibility, not the government, even though the government, the bill that Congress passed set forth a bunch of requirements that they wanted around eligibility and around the terms of the loan. But it's not the federal government that's going to be looking at your applications and then making that eligibility determination. That is by the lender. Let's see. So for amounts not forgiven, it's determined on a case-by-case basis, but capped at 4%, 10 years. My understanding is that they went with 1% as the prevailing loan rate, whereas it was proposed earlier that it would be 0.5%. So I think that was disappointing to a lot of folks. But that's for the amount that's not forgiven that you have to pay back. The payments don't start until 6 months after the loan is dispersed. So payments are deferred for 6 months. The advice that we've heard is generally to apply for Paycheck Protection Act first before you apply for this other program, the Economic Injury Disaster Loans. Whereas the Paycheck Protection Program goes up to $10 million potentially for the maximum loan amount. This one, the EIDL, Economic Injury Disaster Loans, are capped at $2 million, a little lower. It's the same basic eligibility requirements, especially when it comes to small businesses. We encountered one issue with eligibility for the Paycheck Protection Program around whether or not a company is owned 50% or more by an investment company. We've sent a letter to the Small Business Administration and the Treasury Department advocating for SBA in particular to waive the small business requirements. It's called the affiliation rule. So if you're a company that's owned by another company, and there is negative control, at least that ownership entity has over the company that's applying, then you have to count all the employees of all the companies that ownership entity has. And that gets you, in a lot of cases, well over that 500 employee threshold. This is an issue that a lot of folks have encountered. They're trying to keep situations like where, Google owns Waymo. They don't necessarily want Waymo to be able to benefit from a small business program because they clearly have access to a lot of capital through Waymo. But companies that are owned by venture capital or private equity or something like that, where there's not a whole lot of management involvement by the investment company, then that's been an issue. So let us know if that's an issue for you guys as well. We've been advocating on that. Let's see. The lending and the terms are pretty straightforward. The application is made directly to the Small Business Administration. I think I skipped. Yeah, sorry about that. Skipped the Paycheck Protection Program applying. This is an important part. Going back to this last slide that somehow went right past. So I just mentioned the Economic Injury Disaster Loan is an application directly to the Small Business Administration. With the Paycheck Protection Program, you're applying to a lender, and the lender's has got to be a federally insured bank participating in the program. For the most part, there are banks that are Small Business Administration certified banks already, so they're already doing 7A loans. And this is another, challenge that folks have encountered. A lot of banks have other requirements, especially the really big banks. We're getting huge volume, and they're getting a lot of applications, so they needed some sort of gating function, and they said, we're going to prioritize customers that already have a relationship with us, already have accounts with us. That's been a problem for folks. And so that's something that you might encounter as well once this, knock on wood, once this program is funded once again. And so the last bullet here just describes when the applications were initially opened. There will be another date at which you'll be able to apply again once they fund the programs, put more funding towards the programs. Let's see. Back to the Economic Injury Disaster Loan. So I mentioned the application is directly to the SBA. You're able to get advances of up to $10,000, which the program is designed to get you the money quickly within a couple of business days. But I think in practice, of course, that's been a challenge. And so you can apply for that advance via the same link there that we have on this slide. And this presentation will be available to folks afterwards as well. Let's see here, another question. I'm going to come back to this question. It's a little bit longer. All right. So that's the EIDLs. And somebody mentioned that they've heard that they should apply for EIDLs first before PPPs. Yeah, I think that that's part of the problem with new programs that are ramping up so quickly, trying to get so much money out the door. It's been difficult to get kind of straight advice. So appreciate sharing that. So there are differing opinions about who, which loan you should go for initially. But we're going to be watching this closely, and hopefully with the economic injury disaster loans, they have not run out of money, but my understanding is that there've been a lot of delays in that program as well, especially since it's the SBA itself that's trying to determine eligibility. And so as opposed to that process being distributed throughout all the lenders, that are participating, it's been a challenge. And with the Paycheck Protection Program, my understanding also is that they were able to get funding out for 1.6 million businesses. That's a small fraction of the small businesses in the nation that probably need the funds. I think it's 6% or so of small companies is what I've heard. And so they desperately need to fund that program again. And a lot of folks are kind of waiting on their applications to see if more funds will come in. Let's see. On the Main Street lending facility, this is really for larger companies that were successful before the COVID-19 pandemic caused the economy to basically grind to a halt. It is provided by the Federal Reserve. Basically, you're eligible if you had at least $250,000 in EBITDA, basically profit in 2019, the upper limit for size is 10,000 employees, and 2.5 billion in revenue or less in 2019. The thing that's catching a lot of folks and catching them up is the fact that you have to be a business that's created or organized in the U.S. Most of business and most of your employees have to be in the U.S. There have been a number of companies that have taken issue with that. The features of it are just let's see. The features of it are 95% of the loan is purchased by a fund that is a combination of Treasury and Federal Reserve funds. So a little bit like Fannie Mae, they are purchasing the loan to make sure that the market for these financial instruments is moving. The minimum loan size is $1 million. The max is lesser of 25 million or 4 times EBITDA. Earnings before interest, taxes, depreciation, amortization. It's an adjustable rate of SOFR, that's the replacement for LIBOR, plus 250 to 400 basis points, so 2.5% to 4%. It's got a 4-year maturity, and you don't have to start paying for a year. So the deferral for a year, I think, is the main attractive feature. We have a link below to walk you through a little bit more. This one gets a little more convoluted. And again, it's for kind of the larger, a little bit more sophisticated businesses, not really the startups that are not yet in profit mode. It's for sort of established companies. Unemployment insurance, that's going to have to be an option for some folks. What the federal bill did, it's called the CARES Act. Again, the bill that Congress passed, the $2 trillion stimulus Congress passed back in late March, added funding to unemployment insurance. So all unemployment insurance programs are run through state departments. So for example, Louisiana Workforce Commission, it just depends on which state you're in. The eligibility is a little bit expanded. So it's workers that are otherwise traditionally ineligible can apply. So it's workers who had job offers, who have started a job, who have just started a job, are about to start a job, folks that have limited work history. They are usually ineligible in general for unemployment insurance. This new law says that states you have to make them eligible to get access to the funding. So folks who are self-employed, independent contractors, gig workers, they're all eligible. And it's, a lot of states are doing programs where companies are agreeing to furlough their workers partially. So they're reducing hours, and unemployment insurance is picking up some of the rest of the paycheck they would otherwise be making. So on top of the usual unemployment insurance checks, the federal stimulus law adds $600 per week. And that's all unemployment insurance checks, even for folks that wouldn't have otherwise been eligible. They also have that extra $600 per week. So it's in addition to the usual unemployment insurance, which is like 60 to 60% of wages. And usually that's capped. Usually there's a pretty severe cap on that as well, tied to kind of the median wage in the state. And for unemployment, it's for unemployment during the period January 27 to December 31. The maximum is 39 weeks. And then the other addition that the stimulus added was if your unemployment insurance is about to run out, or if it has just run out, the program adds another 13 weeks. And that includes the additional $600. The last one is the employee retention credit. It's a federal tax credit. It applies to qualified wages from March 12 this year to January 1 next year. The maximum credit for employee is 50% of wages, up to $10,000 total per employee. So again, half of wages, but only up to $10,000. It's fully refundable. And so even if there's no tax liability, you get the money back. So that is potentially an attractive route for folks that are keeping people on payroll. So the eligible employers are companies that are fully or partially suspending operation during any calendar quarter in 2020 due to orders from government authority limiting commerce, travel, or group meetings. And you're experiencing a significant decline, 50% loss from previous year for that quarter in gross receipts during the calendar quarter. And so you can claim the credit for the significant loss quarter. Let's say the first or the second quarter, you have the significant loss, and that's the only quarter that you have a significant loss because it's 50% or less of 2019 second quarter. Then you can claim the credit for the second quarter and then the following quarter. So the second quarter and the third quarter. Let's see. You cannot receive a Paycheck Protection program loan and have a retention credit. But I didn't see a bar on getting the retention credit and the EIDL, for example. So the information on this is pretty good. It's a nice summary in that link that we have on this slide here. So the advocacy that folks can do is around making sure that Congress is going to pass a law that will fund this program again. That's the pretty simple message. It looks like they're pretty close to a deal. And so, maybe they need a little bit of help getting there, hearing from constituents. So we have a link here that shows you, it's just a quick how to find my representative. Enter in your address, and it'll tell you which two senators and which representative represents you. And we have some suggested text down here that just is really generic that you can absolutely personalize and send it in. Because these offices oftentimes they'll aggregate the messages that they get. And we have a question here. Will slides be provided afterwards? Yes, we will provide slides. There will be a link on the website which we will provide, and we also get to this slide. This is a QR code that you can scan, and it'll send you just a bunch of links. So not just the slideshow, but also a lot of the links that you saw throughout the presentation, and that that can provide a little bit more information about how to apply, eligibility details. Hopefully we were able to provide a little bit of background on this and some assistance Like I said, please reach out to us if you have specific questions that we didn't get to, we didn't address here, and we'd be happy to help any way we can. So thank you all for participating. We should wrap up, but good luck with the applications for those of you applying, and we'll be there to help out as we can. So thank you all.